Toronto home prices just collapsed? What the heck is going on? Stay tuned to find out in this week's episode of Prime Properties TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. The numbers are out for April, the one that everyone's looking out for, and holy cow, did everything just collapse. Now, these are the official numbers, and generally with my market watch, I try to keep it a little bit more simple so it's more digestible because there's just so much data. But in this case, because everything's kind of moving and we're kind of comparing different time periods, and I'm going to give you big charts of what's going to happen in different specific locations and regional specificity. This one's going to be a little bit more technical, so the format's going to be a little bit different. But without further ado, let's get right to the numbers, right? So over here on the side of the screen, wherever I'm going to put this later, you can see that the highlighted yellow part here are the numbers that just came out. And this is based on a month-to-month basis. And I've always said this, you should always go month-to-month when the market is shifting so much. Because if I look at month-to-month, prices are down. But if I look at year-to-year, prices are up, right? So again, the numbers dictate how you paint the picture. And I'm going to tell it to you right now. It's not good. Stuff is collapsing like crazy. Poo-poo is hitting the fan now, officially, right? Now, the last episode that I did talked about how prices in towns came down 22%, but they used this weird kind of rolling 45-day average. So you can check out that video up here, but this is now the official numbers from the Toronto Real Estate Board to give you an idea of what's going on. So the highlighted yellow here shows you that the average price right now, as everyone cares about, right, is $1.25 million. So we're down about 3.5%. And the months of inventory has climbed. It's almost doubled now. And for it to double, it means that we are having a buildup of new inventory plus a reduction in amount of sales, which is very significant, right? Like I've always said, the buyer's market starts somewhere between 5 to 6 months of inventory, but for prices to come down, it needs around there. However, we're seeing this right now, and this is actually quite rare, right? Now, when you look at the sales number over here, we got about 8,000 sales. That's way down from what we got last month. So that's what I'm saying, sales completely collapsed. Usually when you go from March to April, the numbers actually go up because we go into spring market. But now for it to reverse, it's wild. So at the peak of everything, February 2022, the average price was 1.335. And you can see that we're now at 1.25. So when you take a calculation, we went up about, call it 15%, and now we're down about 6%. So ultimately, we're still up depending on, again, where you buy. But remember, this is very holistic in the entire market, right? So don't, just take this numbers, end the video and be like, oh, the world's collapsing. You really have to look into kind of which area and what type of property you're looking at. Now, the last thing I want to point out in this chart specifically is that the active listings, this is the amount of properties that are available, and it should build up over time. So this is normal. Now, the second chart I'm showing you here is all the numbers for amount of sales that we normally get in April since 2008, so more than 10 years. That red line I have going across here is essentially the 10-year average, right? So what I'm trying to show you here is that if you compare last year's sales to this year's sale, which is right up here, it's never been this high ever before in April, and now we are collapsing down. So we went from like basically 13,500 sales to what is equivalent 8,000 sales. Now, that's a really big drop off. But you can't use these numbers to compare year over year because it's just a different timing of the period, right? So why we want to use this red line over here is because you want to see how we compare to a longer duration of data points, right? Because the more data points there are, the better off you're going to be. So you can see that we are well below the 10-year average, which is around 9,500. So that is actually a red flag. It means that a lot of transactions are not happening. The buyer sentiment is shifting. People don't want to buy right now. You see that? Now, you can see this little blip down here. That was the pandemic. It's like the runt of the family, the black sheep. So now you got here the same kind of chart, but for active listings, how much is remaining. So you can see the red line is, again, the 10-year average, and we're looking at usually somewhere between 16,000 active listings at the end of April. And you can see that ever since the pandemic, we are actually well below the 10-year average. So when people start talking about the inventory building up, yes, it is. The inventory is definitely building up because the sales are down. But the amount of new listings that are coming out and that are remaining, staying on the market is actually still well below the 10-year average. Now, this is not to paint you a rosy picture because your months of inventory can still definitely go up while the active listings stay below the 10-year norm. And the sentiment changes and they don't want to buy. So you're probably going to see that as interest rate hikes continue happening. So as that kind of happens with active listings still below 10-year average norms, but the sales keep coming down, the months of inventory will build up. And I think we'll probably get to 2 in the average, and then we may even hit 2.5. And at that point, everything's up for grabs. Now, the next chart here I'm going to show you is we're trying to paint you a paste of history of what has happened, because everyone always forgets. And a lot of people are now comparing 2017 to now, or even also to 1990s, right? I actually have no idea what's going on right now because there's not enough data points. But if you had to ask my gut feeling, what are we more closer to? I think we're closer to 2017. But of course, like, I was just born around the 1990s, right? So I obviously don't remember that. I don't have all the data for that. So again, I don't want to give you kind of a perspective of what can and cannot happen, but I'm just going to show you what I'm seeing, what my gut feeling is saying, and then combine this with the macro at the end of this video to give you an idea of what's happening, right? But to give you kind of a little reminder of what happened since last summer, right? It's July 2021 over here. You can see that prices went from $1,060,000 all the way to 1.33, which is the high, and it came down to 1.2. So all in all, you can see that when you add all this stuff, prices have gone up about 25% in total, right? So if you are going to see, call it another 20% correction, which is what we got in 2017, then will bring us back to July 2021 prices. Just let that sink in for a sec. Yeah, it's kind of ridiculous. Now, for you to kind of imagine where we are right now, you see how our prices at 1.25. We're basically where we were at the end of January, right? So despite kind of all the craziness that's happening, we're back at January. Now, just because it's crazy right now doesn't mean that we're not going to continue sliding and collapsing and having prices come down, right? Because like you can see that the amount of sales are really going to start coming down. If we see May numbers around, call it the 6,000, we're in for a real hurting because inventory is building up, which means that there's more downward pressure on prices and there's going to be some discovery on people who need to sell. But I've talked about this before where I think a lot of the pricing that's coming down really hard right now is a lot of the towns and semis that have come down because people are forced to sell. And you'll see what I mean by that a little bit later. I'm just going to kind of continue on this whole what happened in the history versus to 2017. So what I have over here is the 2017 numbers. You can see I started from January 2017, where I had a very similar run up to what we just got in 2020. I was saying no inventory, too much people trying to buy. And then we had that massive run up of 20%, right? So very similar to ours. Ours was 15 in this year. Now, the prices have dropped significantly more, so they drop about 15%. We're down about 6%. I think there's more collapsing to happen. Prices will come down a little bit more because of the interest rate hike. So if I'd say in terms of magnitude, how crazy we are now versus 2017, the numbers clearly say that it is much, much worse in 2017, right? But again, we're still very early stages into it, right? Now you can see that we basically had May all the way to about August, prices drop. Had a little bit of a bounce back up, right? Dead cat bounce. And it continued coming down all the way, I would say, until the end of 2018, where I was seeing that for detached homes, specifically 2019, the sentiment slowly started changing and people were starting to buy detached homes again. And that's when we saw the rally at the end of 2019 where prices went back up, right? So you can see we went from as high as about $920,000 and it didn't really cover, it doesn't turn this out until like at the end of 2019. So let's call that an 18 to 24 month time to recover from that. Is that going to how long we're going to drop to in 2020 and for recover? Again, nobody knows, right? So here's the kind of chart side by side. Again, I was saying we went up 14% over here. We already went up 14% in 2017 1 month, which is wild. And then it's total about like 25%. We're up about, 15. We're down about 6 right now. In 1 month, we came down 6. But remember, the 2017 shock was a really, really big shock. And again, the York region homes felt it the hardest. So are we close to 2017 right now? Very similar. I would say if 2017 was a 10, we are probably like an 8 right now. And 2017 was pretty bad, right? Again, very dependent on where you are. Like I saw some York region homes fall as much as like 25 to 30%. Now, if you're going to kind of compare us to say the 1990s, which, it was, a massive kind of recession, you can see over here that I'm going to just blow this up because it's a little bit small. You can see that we have about 100% run up in price from 1986 all the way up until 1990. Now I just highlighted the parts that are double digit growth, which is with green. And you see that went from 140 to about 200 something, right? 273. So that effectively doubled in price. And it took about 1990 all the way to 1996 for prices to come down. And then it didn't really recover until 1999, right? So that took about 10 years to recover. So that's what some people are saying is going to happen to us right now because prices have ran up too fast. Obviously, I was born like a few years before the 1990s, so I can't say all this was trading real estate then, but I'm gonna give you an idea of why I think prices shot up so quickly. So over here is a nice little website that has a very interactive chart of the overnight rate at Canada. So you can see in this chart over here, the prices started declining at 1990, and I'm gonna show you exactly why, because interest rate hikes went massive. So they were at around 4%. You can see over here, 3.85, which is the overnight rate. Obviously, some things changed depending on where the bank lending is, but you can see that we went up really, really fast in about a few years, up to 8%. So up until 1995, you can see that prices were coming down. And this is kind of where people are comparing where we are now to where we were in 1990s. A lot of people, because of the inflation scare being so big right now, they think we're going to see interest rates up to 7 or 8%. And it'll cause a major crash. And this is where you need to understand kind of the macroeconomics of what's happening. And while I do think there's obviously a chance that this happen, we're in a world right now where, yes, interest rates are very low, but the amount of debt we have relative to what we had in 1990s is absolutely different. So for every single 1% interest rate hike, you have to understand the amount of debt we have to pay back to other people is going to be way, way, way higher, because 1% on $1 billion is nothing compared to 1% on $1 trillion, right? And that's how much debt we have right now in Canada. That's got a really big difference. So that's why I was saying, I do think rates will go up because they need to bring it back up to bring it back down for the next, everything bubble. But is it going to go up to 8%? I don't think so. Like I said in the last video, something's going to break already. And you already saw that there's the recession word coming in the US, right? So that's already a sign of the cracks in the economy. Now, can this happen? Like I said, obviously, but I'm going to stay on the side that we're closer to 2017. But again, you're going to have the boomers come at me saying, hey, look, Zen, you weren't around back then, you don't understand this. But I understand the macro backdrop of what's happening. I think something is going to crack before we can even get to the interest rates as high as what we saw over here. So I think we're going to probably hover around 2 or 3% overnight rate, as they said, targeting, right? So that's kind of the idea I'm trying to show you of whether we're 1990s or 2017. But again, this is all kind of a little bit of critical thinking I'm trying to pass on to you so you can figure out whether, which way you want to do and decide which kind of methodology you want to subscribe to and make your decision in real estate from that point. Now, if this is the type of real estate content you enjoy, make sure you help us spread the knowledge by smashing the like button and subscribing to the Prime Props channel, because every single month we put out awesome market watch data for you like this to give you an idea of what's happening. And I hope that by breaking all this data, we give you a little bit of idea of what's happening so that next time you want to buy something, invest or sell, you're like, Zen and his team, they really know what's going on, right? Because we spend a lot of time on this data, and you want to book a call to strategize your future and use us as your realtors, you can do so right here. So you know how last video I was talking about how the House Sigma data came up for stuff dropped 22% and the data maybe not the best because it's kind of like picking and choosing your data. So I spent some time and I literally broke down the data for you like crazy. And if you want a copy of the data, you can click on the description. There's a link there to get all this data. Now back to the next part that I was going to talk to you about. It's about kind of the locational specifics of your segments, right? So I always talk about micro segments, which is like your detaches in the 416 or 905. I've actually broken it all down some more for you. And if you want this data, it'll be in the link in the description below. You can go check it out there. I'm more than happy to share with everybody so that everyone sees what's going on. So on the screen right now, you're going to see that this is the detached data, right? So I've broken it down into the price on a month-to-month basis in April, which is over here. Then you got your March ones. And then I also made you kind of like a monthly change. And I'll indicate kind of why I put some conditional highlights here to outline some of the items. And I kind of broke it down to every region. So you got Durham region down here, you got Toronto over here, you got York and Peel, and then Halton. So on the right-hand side, you can see sales are effectively down month over month everywhere except for Sugog. Again, if you're picking and choosing this data, you can see here in Sugog, there's effectively 32 sales versus 30 sales. Maybe let's not look at the 6% increase because the amount of data is kind of pointless, right? It's kind of like saying, hey, let's go look at Brock over here, sales are down 70%. Well, you went from 33 sales to 12 sales. So the data points aren't there, but we're gonna look at the larger cities where most people are kind of living right now. And I'm gonna kind of go through some kind of highlights with me. So in the Halton area, I can see that in Milton, the detached homes, while the amount of data is not great, it's still over 50, which we'll kind of use. And the reason why I highlighted the months of inventory over here in this chart as red is anything over 3 will be red. And 3 months is a very, very high month of inventory. We haven't seen stuff like this in Toronto in a very long time. So this tells me that the inventory is building in Milton for detached homes much faster than some of the surrounding areas, right? And you can see that the average prices came down 14%. That's a lot. That is a lot. Now, if you look at Oakville, you're still around like 2 months of inventory, right? You have a lot more sales here, but sales are down 30%, fine, but your price is down about 10%. So you can see every single region is different. Now let's look at Brampton. So if you look at Brampton, sales are down 20%, your average price is down 6%. It's not that bad, right? But if you look at over here in Mississauga, the prices are actually up on average. You see what I mean? It's very specific in the area you're looking at. I'm going to keep harping at this. Now, if we look at Toronto, you can see that I highlighted the months of inventory that were actually green, meaning that it's still fairly strong. And you can see in last month, a lot of the regions, especially in Halton and also even Durham, we were still under 2. But the ones that went to kind of the no highlight went to 2, we saw some inventory buildup. But the ones that went to red, right, which you see down here in Aurora, it means that the inventory buildup is a lot faster, right? So that's what I'm saying, very specific to your location. Now you can see that the Toronto West, Toronto Central, and East Toronto, the months of inventory are still 2. It is still very much a seller's market. And you can see that, like I was saying last episode, that I'm pretty sure the prices in certain regions in central Toronto actually went up. Look, right here, the average price in Toronto Central went up 4% from last month because that's specific of the pocket. If you hit the holy trinity of schools, people don't care, right? We're talking about average prices of $2.8 million. See what I mean? Right? And then now, if we look at York region, you can see that King City, very, very little amount of data. So don't look at this because there's 4 months of inventory, very small amount of data. But these are your massive homes, right? You know, they're on like 60-foot lots, like 5,000 square feet plus. But you look at Aurora, you're looking at 3.2 months of inventory. Prices are down about 5%. But when you build up this much inventory, I'm going to look at this as kind of a leading indicator of where prices are going to go. So I would say Aurora's got a lot more to come down in terms of pricing. You can actually see the same thing in Richmond Hill, right? There's actually a good amount of data. There's 93 sales and prices are down actually only about 1%. But I would say that there's more for it to go down because there's so much inventory being built up. Now, if we look at Durham region, you can see that Brock is at 4 months of inventory. But you know what? 12 sales. The data points are very little. So that's something you can't look at the entire thing and say, hey, this is the world's crashing, right? Every single segment's different. And strangely enough, there's actually a lot of pockets in Durham region that are actually under 2 right now. But I would say if you look at Bradford, completely getting crushed. But at the same time, very small. So you have to look at each and every single pocket to see what the difference is and what you're looking at. That's why I put this data out here for you. And if you want it, again, in the link in the description below. If you kind of look at some of the bigger pockets, like say Pickering, Oshawa, or Clarington, the inventory is still kind of okay, but the prices did come down about 3 to some percent, and it varies from time to time, right? So again, that's the detached segment right there. While there are some really big hitters, actually, when I look at Milton, I'm like, wow, that's a really big drop. It's not the end of the road. It's not like dropping 10, 20%, but on a month-to-month basis, this is actually quite a lot. Now let's go into the semis, right? So remember how I was saying, I think semis and towns are the ones that took the biggest beating because people who are selling their semis and towns that moved up into a bigger home and detached, they're forced to sell because they need to close on that contract. I think this is it. So we look at the data over here, you can see that a lot of the prices in the Halton region are down quite a bit. So you got Oakville down 14%. You got Burlington and Milton also down, right? But the months of inventory, surprisingly, is not that much. But it's one of those things I'm going to have to harp on again, right? The amount of data you have over here is very little. It's very, very little. Now, if we look at, say, the Brampton region for semis, you can see that it's building up quite a lot and the prices are down about 5%. Not as bad as what everybody made it seem to be, right? You got this crazy one with 6 properties, 6 sales. Months of inventory is really high. But if you look at the Toronto region, the months of inventory is still very low, very tight, still got some active sales going. But look, you got sales actually increasing in Toronto West, right? But at the same time, you got some prices coming down. And this is what I was saying, like a lot of the semis, if you're in the entry level stuff, is in the like say East York area or even like the Roncy side, those 3 bedrooms, 1 or 2 washrooms with parking are kind of the entry level homes and people are trying to get into, right? So a lot of people are still striving to get into that type of property because again, Toronto hasn't seen the rapid growth that the surrounding areas saw, and that's why these prices are a little bit more stable right now on a month-to-month basis. Now, if we look at some of the York region properties, again, not much data points for you to look at. And then the Durham region, there's, again, also not much because there aren't that really semis to go around with. Now, I'm going to go through the towns with you guys. So towns, we have a little bit more data because they built a lot more of them in the recent past. And you can see over here that, yes, the towns got hit very hard in the Halton region. Look, there's 10%, 10%, or over 10, 7%, 12%. They took a beating. They absolutely did it. If we look at the PO region, they didn't take as big of a beating. But what I'm seeing over here is that in Caledon and Mississauga, the inventory is building up. Look, Mississauga is already at 4 months of inventory, so I think it's going to have more coming down. But again, same thing, not that many towns in Mississauga, right? So you got to take it with a grain of salt. I would say the Brampton towns are a better set of data than actually the Caledon and Mississauga. Toronto has never had many towns, so I wouldn't say the data is that great. That's why I'm not surprised the months of inventory also remained very low, but surprisingly, actually took quite a beating as well. Now, when you look at York region tends to have a lot of homes that are towns, because these are your Vaughns, your Richmond Hills, and Markham. They built a lot of subdivision homes there, right? And you can see that the prices actually didn't come down that much, but the inventory is building up as well. And then you got your Durham region over here. Prices came down quite a bit in these regions. So you got Clarington, you got Clarington down 10%, Oshawa down 6%, Pickering down 8%. And these are like a decent amount of numbers. And then the last subset I'm going to show you is the condo. And the reason why I'm going to show you the condo is a little bit different from the freeholds, because this is a totally different subset, right? I was saying the market here is a little bit different, so more entry level. And you can see that on this data, it's a lot better. Now, you have to remember, not every single region has that many condos, right? So I'll say, let's look at Toronto, some of the York region ones and some of the Peel region ones, right? So York being Vaughan, there's a big pocket there, Richmond Hill, Markham. And then in Peel region, there's a lot in Square One. Now, if you look at some of the Halton ones, you can see that, again, not much data points here, but Burlington had some condos, took a little bit of a beating, right? But inventory is still quite low, months of inventory. Now, if we look at the Peel region here, Mississauga towns, months of inventory, still pretty good. Down a little bit, not too bad. But the Brampton one, the months of inventory is building up right now. And you can see that prices are coming down. Again, Toronto here, it's broken down to Toronto, East, West, Central. Central has the downtown pocket. And you can see right here, bam, prices actually went up a little smidgen. This is what I was saying. The Toronto detached and Toronto condos will probably do much better in the long run in this year, just because it's a little bit more resilient and people are trying to come back into the city for some work and, the whole hybrid stuff, right? So it's doing pretty well. The inventory is definitely building up, but not that bad. And then you look at York region, inventory is really starting to build up in the Vaughan and the Richmond Hill area at this point. Prices down just a little bit, not too bad. And then you got your Durham regions. You have a little bit of condos in the kind of Pickering area. And you can see that months of there are still very low, but the amount of condos there is just really not that many, right? So this data, again, if you want, is in the description in the link below, because everyone wants to check out where they are, how their property is doing, and what region's doing what. All there for you, free of charge. You don't need to do anything, right? It's so that you can understand what's happening. Because if you just look at kind of the headlines, you'll think and take that macro, apply it to your micro, you may think the world is falling. It may very much be so, right? But this is to give you that data and give you that real critical thinking and look at it yourself to see, is my property actually falling down? Or is this a good time for me to sell? Is there a lot of inventory building in the region I'm trying to sell? And this is all there for you so you can figure it out. And the purpose of all of this, again, is have a little bit of critical thinking. Don't just read the headlines to see what's going on. There are pockets that are really, really bad. Like I was saying, the semis and towns are taking it in the face quite a bit right now, but the condos and the detached are doing actually quite well. All in to say though, this is not to say, hey, look, the market's going to continue going up, because I showed you in the first half of the video, like, look, this is a trend that we're coming down. I would foresee some more prices coming down, assuming that we have another interest rate hike. I said 99% chance in June. So take with this how you will with the data, right? Again, every single pocket is different. And hopefully this gives you an idea of what is happening in the real estate market. This is from real data, comparing it from different time sets of the month, from last month to last few years to even the last few decades. Now, if you're looking for some more specific help in kind of your location, after looking at this data, you can book a call with me using the link right here. It's www.chaozen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.